What's going up, bull runners? Welcome back to the channel. Today's video is packed with some of the most intriguing and potentially game-changing news in the crypto world. From mysterious XRP movements to Bitcoin social sentiment hitting rock bottom and an unexpected political twist that could shake up the market. Stick around because if you make it to the end, I got a special sneak peek for you of our new crypto community platform, Altcoin Pro. Ripple has just made a 90 million XRP transfer and nobody seems to know exactly why. This massive movement of XRP has sparked all sorts of speculation. Is it part of Ripple's regular liquidity provision or something more strategic? Bitcoin social sentiment has just hit a yearly low, which might sound like bad news, but in the crypto world, this could be a signal for a breakout. Here's the thing. When social sentiment is low, it often means the markets are at oversold point, setting the stage for a potential rally. In a surprising twist, President-elect Donald Trump has nominated Stephen Miran as the chairman of the Council of Economic Advisors. Miran, known for his pro-crypto stance and previous roles advising on economic policy, could be a significant influence in shaping a crypto-friendly regulatory environment. We will also be jumping into the charts. We'll take a look at XRP and see what is going on. Where is our next support before the bounce to the upside? We'll check on Bitcoin's dominance. Did it just hit its second top? And will it be coming back down to the downside, indicating altcoin season is here? Starting the video off, let's look at CoinMarketCap. CoinMarketCap currently $3.24 trillion, down 2.96% today. Fear and Greed Index down to 54. So people are starting to really get scared that the bear market is coming back already. Bitcoin dominance currently sitting at 57%. And when we take a look at our top 10 coins here, we can see they are bleeding out severely over the last 7 days. Bitcoin down 10%, Ethereum down 18%, XRP down 11%, Solana down 20%, Dogecoin down 25%. Will your favorite coin survive? And an update on yesterday's video, what we talked about, since the IMF approved a $3.3 billion loan for El Salvador decided to buy 24 more Bitcoin. And you remember, there were stipulations of this loan not going through unless El Salvador eased up on its strong Bitcoin stance. But it was a bait and switch, so they got their money, decided to buy more Bitcoin. So let's talk about Trump's nominations. In fact, this one right here is for the Council of Economic Advisors chairman. And he also, on the same day, just appointed a former football player, Bo Hines, to head the Crypto Council. Moran previously served as the senior advisor for economic policy at the United States Treasury Department under the first Trump administration. During a recent episode of the Bitcoin Layer podcast, Moran said the United States should focus on pro-innovation policies and told the podcast hosts, I think that the financial deregulation is going to be a powerful part of that. I think that the crypto has a huge role potentially to play in innovation and ushering in another Trump administration economic boom. So far, Donald Trump has nominated Paul Atkins to replace Gary Gensler. He also has selected David Sachs as the AI and crypto czar to lead policy advisory for artificial intelligence and digital assets. Sachs is obviously pro-crypto and previously served as PayPal's chief operating officer. Trump's pro-crypto appointments and the potential creation of Bitcoin strategic reserve have caused analysts and pundits to forecast a 7-figure BTC. And then coming over here to talk about the Bo Hines appointment, Bo Hines will work under Donald Trump's crypto czar, David Sachs, on the incoming president's crypto council in a bid to foster innovation and growth for digital assets. On Truth Social, Donald Trump posted, additionally, Bo Hines will be the executive director of the Presidential Council for Advisors for Digital Assets, the Crypto Council, a new advisory group composed of luminaries from the crypto industry and chaired by our crypto czar, David Sachs. Bo is a graduate of Yale University and Wake Forest University Law School. In his new role, Bo will work with David to foster innovation and growth in the digital asset space while ensuring industry leaders have the resources they need to succeed. Together, they will create an environment where the industry can flourish and remain a cornerstone of our nation's technological advancement. Now, with all of this amazing posts, all of these amazing appointments, crypto is still crashing over the last couple of days, which is actually typical during the Christmas crash. Most of the time when the Thanksgiving holiday comes around, we get a nice fat pump to the upside. We have a pullback during Christmas, and then I'll launch into the new year. So we'll take a look at those charts here in a couple of minutes. But very exciting appointments, very bullish for the crypto world. Before we move over here to the Bitcoin social sentiment dropping and this mysterious 90 million XRP transfer, I wanted to give you guys a market update, fundamental recap, and outlook from our analyst at Altcoin Pro University. You can head over to www.bullrunners.com, bullrunners.com, and join Altcoin Pro University today, become a community member, and get daily updates like this delivered straight to you. If you're like most people, you're very busy. You don't have the opportunity to sit in front of a computer and do research for 7-10 hours a day about the crypto world. That's what our team does. So Curious Jay says, this update takes a purely fundamental perspective, no charts needed, by analyzing the key drivers shaping the market from macro trends to sector-specific opportunities. We can better position ourselves for what's ahead. If you haven't already checked out our previous post for key narratives and opportunities, you can click here and click here. They're delivering you exact information that you could use to do your own research and make your own decisions. This builds on those ideas, adding more context and strategy for the coming months. When it comes to the macro or large case scenario, the growth case, the massive increase in money supply during COVID, up 50%, didn't disappear. It's still sloshing through the economy, lifting growth until it finds the new equilibrium. This explains why rates remain elevated and the Fed is working to constrain this excessive liquidity. At this time, debt levels are so high that the Fed is now running a deficit just to service interest payments. This dynamic likely means rates stay elevated, but not at previous cycle high. Trump-era fiscal policy could further influence this. Restrictive policies like the tariffs could bring rates down faster. Stimulative policies could keep rates higher for longer. Ultimately, the setup points to growth. Excessive liquidity, the ability to lower rates, a pro-market administration, a Fed chair supported of higher wages. Structurally, we're poised for another prosperous period, not unlike the 90s. DeFi sector, the narrative is reigniting. The DeFi continues to stand out as a dominant narrative with several catalysts aligning for growth. Historical ETH trends since 2017, ETH has consistently performed well from January through May with only 2 January and 1 February dumps. Institutional activity is ramping up and ETH seemed poised for a strong Q1 2025, assuming no major market disruption. Regulatory clarity is coming because the pro-business policies, potentially under Trump, could provide the regulatory clarity needed for the DeFi sector to thrive, and more institutional inflows. BlackRock and other major players are validating DeFi, paving the way for substantial capital inflows. So where's the alpha? The big names like lending platforms are already priced. Emerging opportunities likely lie in newer DeFi apps. Examples include Gamma Swap and Arrow. Real-world assets and stablecoins like ENA and Usual. OG DeFi protocols, of course, Aave, Curve, and Link. And then, of course, some niche market stuff like gaming and prediction plays that intersect with DeFi. And if you want access to more of this, you can join us over at bullrunners.com. As you see, there's a ton more to cover, but I don't want to spend this whole video going over this information. You can just sign up with us, bullrunners.com. Get your market updates, fundamental recaps. When you go to bullrunners.com or click the link down in the description, totally simple as well. It'll bring you to this page here. You can watch the video. This goes over everything that's included in the membership. It is currently $97 a month. That's going to $197 starting in January. Or if you're one of those that likes to pay and get a discount, you can do the yearly membership, get 2 months for free, $970 a year right now, going to $1970 starting in January. You get 100 plus expert curated classes, live weekly calls, daily market updates, altcoin picks, tech analysis, DeFi yields, global community, connect chat with like-minded investors. We do have over 1,000 members on the team already. As you can see, 21 people are in there interacting with each other right now. Or you can just go and find your own pace. You don't have to talk to people inside, but learn to maximize your opportunity in crypto while minimizing your downside today. Bullrunners.com. So as you know, we talk about fear and greed a lot. This is similar right here. The Bitcoin social sentiment drops to yearly low, signaling BTC breakout. Bitcoin could see another week of correction before it manages to recover above 100K based on historical chart patterns. Social sentiment around Bitcoin has hit its lowest point in 2024, which could signal an incoming recovery above the 100K mark for the world's largest cryptocurrency. Following a 10% correction, social media sentiment around Bitcoin fell to its lowest level of 2024 to an average ratio of 4 to 5 positive versus negative Bitcoin-related comments. However, this low retail investor sentiment could be a sign of an upcoming Bitcoin breakout, wrote market intelligence platform Santiment in December 22nd. Vocal traders are now showing severe FUD, and that's good news for contrarians who know markets move in the opposite direction of retail's expectations. And as we can see here in the chart, July 4th, positive comments more scarce than negative comments. Price surged 17% in the next 11 days. August 4th, positive comments more scarce than negative comments. Price surged 14% over the next 4 days. And right now, current 4 positive comments for every 5 negatives. Bullish probability high. So when we take a look at this historical chart on the left-hand side versus our current view with Bitcoin, and you simply take the fractal from here to where it would be breaking out back over here, if it bounces off this bottom level here as a support level and makes the breakout, this fractal could put us back up to a target of 128,000 for Bitcoin. This breakout came from when we were trading at 31,000, ran up, created this nice channel, and finally broke out to the upside. And then this year with our breakout above 72,000, getting up into these 90s into the 100K range. The blue is the fractal playing out over time. Also, in more analysis, in 2017, week 7, as well as week 8 and 9 were also corrective. In 2021, week 6 and week 8 were corrective. Bitcoin is currently in week 7 and slowly transitioning into week 8. And as we take a look here, this is the post-halving. So post-halving reaccumulation, post-halving parabolic upside. And they're talking about 6, 7, 8, and 9 weekly chart here. So here's the halving, week 7 and 8. So when we take a look at Bitcoin on the charts currently, obviously we had our big push up to our new all-time high up here at 108,000. We have now pulled back. I've got the Fibonacci candles on here on the daily charts. And you can see when we had a run up, this is a nice pullback that we had before the explosion to the full run. This candle is going to be working as our support level to the downside. If we lose this, the bottom side of this support of 90,732, basically if we lose $90,000, the next daily drop correction could lead us to here. Will give us a little bit of, be extra conservative here. I mean, we're looking at a potential drop of 70K. Now that's on the daily chart. So that's if it gets really bloody. I don't see that happening. Let's take a look at a smaller time frame like the 12 hours. And as you can see, there's definitely more support here, even below this level. So if we go ahead and remove that daily and we put in a 12-hour candle support, it would be here. And we can see that it was that support on that the day after the break above 100K, and it had the flash crash, dipped right into that box here at 90,000. So we'll use that for now because I still feel very bullish on the higher time frames. And I have not seen a full flip of that yet. When I look at our Fu Manchu cipher indicator here, one thing that does have me gasping a little bit is the fact that money flow is really starting to come down. We're actually about to get to the 0 line on money flow. It's currently sitting at 12. Now, hopefully it does something like this where the money flow came down, a small little dip under, and then it just really started getting bullish again. That's definitely a possibility. And that possibility is much more likely as long as we stay above these levels here. So 90K is very, very, very important for Bitcoin. Otherwise, we definitely could see a drop back into potentially the 70s. And if we pull a fib here for Bitcoin, let's go ahead and switch this back to the weekly charts. So when we pull our fib from the previous all-time high to that most recent swing low, price ran back up, obviously making these highs here, had that bull flag pattern play out to the upside. And if you take a look where it went to the full extension of the Fibonacci, the 102 level. Now, obviously, it got all the way up to a 108, but it just spiked through that level. So you can see right here, it did spike right up on through there, made that new high, but we can see that is a full fib extension from this move here. The other interesting thing when we take a look at this is since the breakout of price, we have not really retested this area, one being the 69,000-ish all-time high that was previously. We got up there, rejected off there, obviously, for quite some time, finally broke through it, but that area has not been retested back at 69, 70,000. So we'll continue to monitor this. Again, this is the most important level right now, the level of 91,000 to 88. If price gets back into this level, needs to keep that and then make its move back to the upside. If not, we could see a return back into the 70s, retesting this box down here, and also retesting our previous high from November 8th, 2021. But as the article we were reading, social sentiment is low, meaning people are freaking out. They think the bull run is officially over. We've officially topped out. Typically, that would give us at least another run to the upside, blow off top. We have all this talk about countries buying Bitcoin, United States having a strategic Bitcoin reserve, a lot of positive fundamental news coming our way. It just hasn't officially happened yet. So we'll wait and see for January to see how things play out. Ripple makes mysterious 90 million XRP transfer. What is going on? According to on-chain data, Ripple has transferred a significant amount of XRP to unknown wallets, attracting interest from the cryptocurrency community. According to blockchain data tracker Whale Alert, Ripple shifted a total of 90 million XRP to 2 separate transactions in the last 24 hours. The first transaction involved the transfer of 50 million XRP worth the $111 million moved to another unknown wallet. Shortly after, second transaction saw 40 million XRP or $89 million sent from Ripple to an unknown wallet. Interestingly, these transactions come amid a period of increased volatility in the market. XRP is holding steady above its key support levels following the massive sell-off in the past week. At the time of writing, XRP's price was down 2.12% at $2.27, recovering from earlier losses amid broader investor caution toward risk assets. XRP dipped to lows of $2.17 in a Sunday session before slightly recovering to $2.29 despite the recent market sell-off. XRP remains up 266% for the year. So what is going on? While the exact reason behind the 90 million XRP transfers are unknown, large-scale transfers often present a few potential scenarios. Such movements may be related to routine liquidity operations or preparations for on-demand liquidity services. Another possibility is wallet restructuring or internal fund management. Large transfers to unknown wallets, which are not linked to crypto exchanges, might suggest buying. If this is the case, whales or institutional players might be accumulating XRP. The timing of the transfers is noteworthy, coinciding with a period of market volatility that saw several crypto assets trade at a discount and days following RLUSD launch. RLUSD stablecoin went live on global exchanges December 17th in a major milestone for Ripple and the crypto community. Described as an enterprise-grade stablecoin, the Ripple USD RLUSD introduces a top-tier, fully backed US dollar stablecoin to XRP Ledger, combining fiat stability with blockchain efficiency. Now, the other rumor that's out there right now that this money could also be the transfer to pay off the SEC for the settlement. So, a lot of speculation going on about XRP. Let me know what you think it is down below. Now, I did want to jump over to the XRP charts and show you something I've been working on. This is the weekly spider lines, and this idea comes from CryptoFace on YouTube. He says that almost all cryptos can have this, but basically you go from a high area of value for your coin, and of course we're using XRP, and you're going to be on the weekly charts, and you're going to take the tops of each one of the Fibonacci candles and swing it to a pivot point or fulcrum point, which is actually perfect. XRP, this plays out so good. More than I've tried it on many coins, but it plays out so good here because we had our all-time high, this fulcrum point in the middle when we went to $1.90, and then we have this new breakout to the upside. Now, what's interesting is we've already obviously gone above and beyond these breakouts here, and they were huge, huge increases in those times. What you'll notice, though, is the time of these drops, they were significant. And that was 1, 2, 3, 4 weeks that there was a significant drop, and then it got really choppy in the drop to the downside. And then for us, for the upside, we got 1, 2, 3, 4, and then now Chop City, right? So today was a very major day because we had the daily candle close just now, we had the 3-day candle close just now, and the weekly candle close. All 3 of those candles specifically closed this week. Now, we also have a major thing starting this week off on Fibonacci candles. It's our first red candle. This could change to a green candle if we start to push to the upside, which I really hope for, because this could be a very bad sign. As you see, last time a green move up turned red, it started to crash down to the downside. And same scenario over here, when our previous all-time high turned red, we had the crash to the downside. Now we're starting the week off to the downside, but there's still 6 days, 22 hours left that this could push up while I'm recording this video. We're also going to switch back to traditional candles here. But what I want you to see is how perfect that these spider lines do play out. So when price ran up to its most recent high, it spiked right through this spider line here at $2.84 and retraced, came back and supported at this one. 2 weeks ago, the drop came here, tapped right off of that level. Last week, the whole body of the candle was trading in between these two levels. This week, we started off to the downside below this spider line, as you want to call it, which is essentially a trend line. So right now, our trend line, if we're going down, our next level to the downside is the $1.92, $1.95 range. But this is the charts on the weekly spider lines. Now, I also did a daily spider line chart. And so here we can see the different levels that was created from they're actually 3-day spider lines. I didn't want it to be too busy. I mean, it's already pretty significantly busy here. So the other thing that I thought was extremely interesting about this is our previous all-time high came in December, January of 2017 and 18. And if we track back these lines and where we're at now, we're in December, January of 24 to 2025. So yesterday's candle closed below this spider line, the blue one. We'll go find that. And today's spider line today's candle is below the spider line as well. So our support level is going to be $1.93 on the spider line version. But when we go back and take a look, okay, where did this blue line, which is now our current resistance level, because we broke down below it, where does the blue line originate from? And that would give us January 19th of 2018. So as the correlation of the drop of our previous all-time high going to continue pushing us to our new all-time highs. As you can see, all the lines that I've drawn from our drop to the downside from 2018 became near exact spots of support and resistance on the way up and where we're at now. So our next level to the upside, as we transition back to the up, would be around $2.91. But when we come back to the weekly ones and look at these, we can start to see $3.03, $3.07, $3.21. So breaking that new all-time high to the upside. And then when you take the charts and you turn them on to logarithmic, this is how you actually find your spots. Let's go ahead and draw another one. So we're going to take a ray and we're going to go to the next candle down and tap it to the top of that one into our fulcrum point. And then we're going to grab another one here. And we're going to put on the fulcrum point. And we'll do one more here to the fulcrum point. Okay. So what's really exciting about this is when you see where this is trajected to the upside, we still have all of this. In fact, here we'll do one down here. Trajectory here. And when we come back to our current spot in the charts, traditional candles, you can see it does get very busy on the way up here, but you can see like a $3.55 resistance level up here. But the one from the bottom, as we continue to go up over time, we're looking at $8.33 here. And there's even ones lower than that. So we'll continue to track this, see how it plays out. I know it seems pretty far-fetched and pretty strange that it would work out. However, when you look at it, these are just the weekly ones. We can see where price was hovering. It made the breakout, went up to this first level and hung out, made its way up to this level, became a support, made this level, and it's been chopping around in here. So it's pretty exciting to see how this will play out over time. Now, the only thing that everyone wants to know, though, is like, hey, I'm really excited. We're getting a dip here. I want to throw more money into XRP and Bitcoin and all that, but I don't have any more money to throw into the dip. And I don't have a side hustle. I don't know how to start a side hustle. I don't know what to do. Well, the great thing is we here at Bull Runners have made one for you. So check this out.
Hey bull runners, this is super time sensitive, especially if you're looking to stack more crypto before the bull run is over. Did you know that Visa and Mastercard lost a $5.5 billion class action lawsuit for imposing unfair fees on merchants and business owners? So if you own a business, or if you know any business owners that process payments with Visa or Mastercard between 2004 and 2019, that's 15 years, you could actually be owed a refund of 1 to 1.5% of your total revenue from that period. That's a lot of money. For example, this business that generated 1.6 million in credit card revenue during those years is getting back $28,000. This business that generated over 7 million is getting back $93,000. And this business that generated over $20 million during those years is getting back over $320,000. That's money they didn't even know was on the table. And all they did was fill out a form through the link below this video. It literally takes less than a minute to see if you qualify, but you don't want to wait too long because the deadline to file is February 4th, 2025. So the sooner that you fill out the form below, the sooner that you can reclaim what's rightfully yours. Plus, if you don't have a business, you can actually earn 3% by referring businesses that do qualify by creating your affiliate account through the link below. So this is a no-brainer way to get money back in your pocket to use for your business, or if you want to use it for crypto or other assets to invest in, you can do that. So click the link below. Let's get you paid.